So, Brian, I know that being an alpha male, you might not have any of these, but I was going to ask you anyway, what are your feelings about what's been going on with Tesla and Tesla stock over the last like 5 days?
Um, Fortunately, because I've experienced the last major downturn where we went from like 400 down to 100, I'm now far more prepared for it. And I was actually not surprised that it was happening. Yeah. So I was kind of anticipating. I think we talked about I was expecting the move like 2019, 2020, right? That we went up in 2019, 15 to 60, down to 28. I was expecting the halving that it could happen. And expecting the attacks on it. So I should have realized it a bit earlier, but I did, a few weeks ahead. I know. So the last 5 days was not, yeah.
So then all of a sudden, though, we got some good news this morning, which predict could have been pretty easily predicted that if it happened the way it happened, that Tesla stock would bounce pretty well and that the market would bounce. Tesla had some additional good news from the president running the most expensive advertisement in history yesterday in front of the White House. But what did you think about the action today?
Um, Yeah, again, the recovery on the stock was good because it really uh the crash on Monday was because what Sunday that President Trump had said that a recession might happen because of all the cutting of government spending,
Right.
and that would be okay because we would come out would be better. Now actually we'll have a deck that describes that issue, and then so that was what happened Monday. But then because thing, things were more positive, it was overdone, then all the other positive statements um, sent things back the other way. It was an oversold thing. It was like way overdone in general leading up to it, and then it was again overdone on the Monday, which isn't to say that we won't retest going back down again, but that the downside risk is far less than the upside potential.
Okay. Far
So it
less.
could go up a lot more. Like we could go up to 500. We might
Right.
drop from
Right.
here down
Right.
to
Right.
180 or something like that. So
Right.
then you could drop 40. You can shoot up like 300 or
Two.
something like that.
So that's right.
Right.
So if in terms of the macro right now, you've heard me talking about the economy. You and I have talked about the economy. I was saying 50-50 chance of an actual recession, but certainly some slow days, slow months. President and the Secretary Treasurer both said that they thought that would be true. And it seems to really, as I listen and listen to more and more people, it seems to be more around the uncertainty than the actuals, if you will. So people putting their hands in their pockets because of uncertainty and not spending. The what do you call it? The lenders not wanting to lend, IPOs not being created, um, uh, the small business owners being uncertain, so they're not as ready to go out and buy more merchandise or put in new automation. So is that kind of how you're seeing things right now? Do you think that once the uncertainty goes away, which could take weeks or months, that the market is back on to all-time highs, or what do you think?
I'm not sure about snapping back to all-time highs. I think it's going to take longer, but getting back to um, market neutral, which would be market neutral for Tesla might be 350, right? Um, for the overall market. Well, basically, because the big tech companies got beaten down pretty good. The Mag 7, Apple, Nvidia, Microsoft, etc. Then again, slight recoveries from them would then take the market up pretty good. But the fear slash uncertainty could last another 2, 3 months. But there's some major um, events that could settle people down. That if the war gets ended, the Ukraine war gets ended, that will have a substantial effect, which I have detailed again later. But those there's several events like that that could get things calm. Having the certainty of some form of budget bill.
Mhm.
The continuing resolution, not so much. I think you need to have um, the first air quotes real bill. But even getting past the continuing resolution, which I think is quite certain going to happen, would also be helping create the certainty. So it's a step-by-step process.
Okay, all right. And by the way, I just want to let the audience know that Brian has prepared a deck. We'll get to it in a couple of minutes. It is phenomenal. You don't want to go away. Hang in there. We'll get to the deck talking about the future of inflation. And I think it's spot on. That was the main thing I wanted to talk to him about today, but I did want to kind of build up to it. So okay, Brian. So what do you think is going to happen with the Ukraine situation right now? I know you've given me some opinions. Back and forth, but I'd love to have the folks hear what you think.
So I think that the ceasefire deal will get accepted. The so people don't know there was a complete ceasefire deal offered by the United States, agreed to by Ukraine. So that was yesterday. Today's Wednesday. Tuesday was when it was agreed to, and that means that it would be a 30-day complete ceasefire, no shooting at all, if it was agreed to, and then it'd be 30 days to actually discuss it. So I believe that that will happen. It could take over the weekend. They'll be a meeting on it officially tomorrow, but they're already talking,
Mhm.
I'm sure.
Yes.
Um, just having the actual envoy person actually going there. Um, so it could be signed as early as Thursday, but Friday through Monday is about my expectation, and I could see how it could get delayed later into next week. But I'm thinking that there's um, if the decision has been made that it's okay to stop, right? That basically they're the they're at a stalemate, right? That there's, yes, Russia could keep pushing forward, and then they could get, one or two cities over the course of a year. They kind of like have one semi-encircled, uh, and they would take several months to take it. It would be, into the military details, it would take a bunch of time. Anyway, so it's like, why bother? You already have 20%. I go to 20.2%. Who cares? Right? It doesn't matter. Right?
Yeah.
So if I'm gonna stop, then it's all a question of negotiating. Do I give, is some little bit of land given back? So you get down to negotiation because you have no actual benefit from like continuing to show, hey, I'm a tough guy. Well, we fought for 3 years. We know, right? So then it's just getting this other detail of like what land goes over how much. There's and for people who will look at it, um, Russia has 20% now. I don't see them giving back, you know, 5% max. 5% max. They will keep Crimea, they'll keep Donbass, all the stuff from before. They'll keep a large part of what they got going in the middle. I think they could have might be willing to give a bit more before um, the Zelensky did his little show. So actually, the Ukrainians hurt themselves doing that. They could have got a better deal. Um, and then getting any land back at all will be because Trump and the United States stepped in to offer a bigger global deal, right? It's not about whatever is happening. If you only looked at what's inside the war itself, you would say, okay, why do I have to give anything back? I fought for this. I'm going to stop right here. You just stop fighting. The line is where you stopped. You're done, right?
Mhm.
So to give back anything would involve Trump coming in to offer sweeteners on top, which I think he's done.
Right.
And
Yeah.
and it's yeah.
Definitely,
So
definitely, absolutely. Okay, so I just I wanted to just spend a minute on Elon's politics because obviously people are upset about his politics. Gee whiz, he gets involved in politics, and we have all these negative things going on. And then but then there's the 100-point run-up that we had, 150-point run-up that we had after the election, which was probably, at least according to all the pundits, was about Elon's politics. And one could probably say that the run up today, 17-point run up during the regular hours, was at least half due to the politics of yesterday, when the president showed off the cars and purchased a car and then Hannity and So Brian Kilmeade, was also
Right.
talking about in his show. So all this stuff, the politics can cut both ways. So I did a poll. I thought, what the heck? I've got Tesla people following me. This poll could actually have some validity because I said, Tesla investors only, please answer the poll. Two-thirds of those I polled think that the politics has a positive effect on the company and the stock. Two-thirds. That kind of blew me away.
Hmm.
Two-thirds. And
Yeah.
that was getting some pretty good numbers. I didn't, I could look at it again later, but when I looked at it, it was decent numbers coming in and it was running two-thirds. So I thought that
I
was
agree. I agree that's a positive effect. Net positive. They're definitely negative, but overall positive.
So if that's true, then we're sitting in a positive situation going forward. If of course there's always setbacks, there's always things that can happen, but I haven't heard anything about people torching cars, shooting into buildings for over 24 hours now, Brian. Do you think that might have also come as a result of something that the president said?
Oh, the fact that it's declared an act of domestic terrorism, and then by adding that in, that if you get actually charged with that, I think your penalty can go up like 10 to 20 years. Yeah, I
Yeah,
think that might
might might
bump
have
up the people
incentives.
deterrence. Yeah,
Yeah.
deterrence. Yeah,
The disincentive.
yeah.
All right. Well, we sit here today. We've had the recovery of a couple of points on the Dow. The Dow, not so much, but the Nasdaq really had a good response today. We've got Tesla really bouncing back today. Nvidia bouncing back really good today. Um, in order for this to continue, because the main reason the markets bounced back so strongly was because of disinflation, strong numbers, very strong numbers, better. They were already thinking they would be down compared to last month, and then they even beat those numbers. So you believe this is just the beginning of the trend, and you've got a couple of slides to prove that. Okay,
Yeah, about 6 or 8 slides. Okay, so I think there's gonna be economic boom after a possible recession.
okay.
We're going through the slowdown right now. May last a quarter, may end up being negative, may not. But probably at least
So,
1 quarter.
so recession being defined as 2 quarters,
Yeah.
we might have negative GDP for a quarter.
Mhm.
Maybe it could last longer, but an actual definitional recession, probably not.
Yeah.
Okay.
Yeah. But if we get the huge interest inflation down less than 2%, that was the thing that the Federal Reserve said, okay, get down 2%, below 2%, then they'll be able to cut interest rates a lot from they're in a restrictive mode right now because interest rates are above, what inflation is. Because inflation is 2.8%, your Fed fund rate at what, 4.75, you're 2% over. So it's restrictive. By definition, that's restrictive. Interest rates could go down 3.5%, the way I see it. So I'm going to run through some more in terms of how I see that happening.
Okay.
So one, egg prices are way down. People are super concerned about eggs. They got to like $8, $9 according to the um, eggprices.org, which tracks all these things across the United States. It peaked at $8.17 per dozen and then fell down to $5.51 in the last reading. Normal is 3 to 3.50, right? When you're back in October, that just above $3, that's relatively normal for eggs. If you get that, CPI drops 0.2 to 0.3%. If we get eggs prices back to normal, that's 0.2 to 0.3%. So our 2.8 goes to 2.6, 2.5% on CPI just from eggs.
That, that,
And
that was
all this
that,
take,
that was that was shocking to me. It would
right.
never have occurred to me. I mean,
Yeah.
obviously, eggs are in like everything I eat because I
Yeah.
love pastries.
Yeah.
So,
Yeah.
so, but I had no idea that eggs could have this much impact on the CPI.
Right. And the other thing would be that the reason egg prices went up so much is because over the course of 2024, we killed 150 million chickens
Right.
because of bird flu. Basically, if you detect bird flu, hey, the birds look kind of sluggish today. They all look sluggish. It spreads so fast. You basically have to kill them all. right?
Yeah.
So they killed like 44 million because like entire states, all the birds got killed, right? So, but now you replace them. I get some new chickens, and then they grow. 5 months they're full grown, right?
Okay.
So they got killed at different points, and then we're now starting to this drop means it's starting to come back, right? And then by um, May, June, we should have full grown chicken. Chickens only take like a few months to grow back, and then they're laying eggs, and then you're fine. So this, you know, barring another wave of bird flu, we should be at normal prices in June. Not magic, someone did it, just the birds grew back. So, okay, so in gas. So if gas prices can come down like a fair bit, we're at like $3.09. We're down like 2% from $3.14 a month ago. So they're trending down, right? But if we went to 55, $60 a barrel, we could see, like I don't know, 50 cent drop, like a 20% drop in prices.
Mhm.
That would be, 0.3 to 0.5% on CPI, which if you had zero point 0.3 on eggs and zero point 0.5 on gas, you bet 2% right there,
Right.
right?
Right.
True inflation,
And that's not counting what we know oil is already down and it's really probably not fully in yet.
right,
And natural gas was one of the ones that was in the wrong direction this month. And natural gas will probably reverse on that and probably be headed more into normal range in the coming months. Yeah.
right. So Trueflation has real-time tracking of prices, like a million prices that they track in real time. They're saying they're reading 1.32%. But if you roll back into early February, late June, that's when we were at the 2.6 to 2.8% level.
February,
So what,
June. Help me out. To
what?
back into February or
February and January. February, January. So
January, February. Okay.
yeah, January, February. Yeah. So January is definitely at the 2.8 to 3% level. And then as we kind of get into February, depending upon, how this little chart goes, that's when things really start moving down.
Okay.
So we have about a 5, 6 week lag to substantial drops, according to Trueflation and how this chart seems to be leading it. Yeah.
Once again, I know I just said it, but let me restate it. In that period that they're showing this large, and everybody that, well, people that have followed my channel for a long time know I used to have a love affair with Trueflation, and then eventually I was like, there's some things I don't like. One of the things that I did find was generally okay about Trueflation was the trends. You could tell by the what was trending, the directionality at least was good, even if the final numbers were not great. What you're seeing here, though, we know for a fact that in the last 7 weeks, oil has dropped from $80 a barrel to 65, 66. We know that eggs have dropped. We just saw the situation you just described what's happening with gasoline. So these are major categories that we know have already been impacted since Trump has been in office.
Right. So directionally it's there. Maybe not 1.3, but we already have a 0.5% maybe baked in or even 1%. Okay. So then if we get below 2%, then that could let the Federal Reserve cut, maybe twice, something like that, get us down to 4%. And that would help with mortgages, 30-year and 15-year, getting down from like, I think things are just sometimes getting below 7% now. So then getting down to below 6 is possible, even
Mor-
down to 5
Yeah,
is not out of the question.
mortgages right now are about 6.6.
Right, 6.6, right. So we can get another percent out of it if things go right. And then if we had three cuts, then you'd be at 3.75%. And then even things get even better into the 5% ranges in touching the high fours.
Right.
So if there's a Ukraine peace deal, so we just said that we probably think that there can be one, and it could happen pretty quickly. So what happens with that? Russia and Ukraine start producing normally and are integrated back into the world economy. So Russia is producing oil, but they sell at a discount to China and India mainly. And they also are the main producers of fertilizer. They are still producing fertilizer, but Russia is down, I think, about 20%, 30% from their peak production levels. If they produce more fertilizer, then um, the fertilizer heavy crops, wheat and corn, become cheaper, right? So, and then also Russia produces a lot of natural gas, a lot of oil. The natural gas number comes down, which, as we said, is a huge factor. Uh, the natural gas, even though they would produce and say go more to Europe or to Africa and the Middle East and that kind of stuff, it would it's still a somewhat global market in that we don't have to sell as much liquefied natural gas to them. We'd have more natural gas for ourselves. It does impact the markets, Asian markets globally when these things happen. Uh, so then all these effects, fertilizer, agriculture, energy, could have inflation fall from those things, not separate from the eggs thing,
Right.
down to the 1.5, 2% level by May, June. Core inflation, which does not include food and energy, would lag because of you're not including food and energy, which are the main things that are coming down. Uh, so based on that, we talk about eggs, 0.2 to 0.3, natural gas and wheat, 0.2 to 0.4, um, corn, meat, and dairy. Corn is fed to cows, which produce meat and produce dairy, zero point 0.1 to 0.3. Oil and energy, 0.3 to 0.5. And then shelter, you'd have some because interest rates coming down, but we wouldn't get that effect mostly this year. It'd be like a next year thing or Q4 at the earliest, starting to see whiffs of that. Total impact 0.8 to 0.6, and then you're at that 1.3 to 2.1% level. And so that's basically it.
And you're not even, and that doesn't even count knock-on effects.
Right,
So for instance, when oil prices go down, natural gas prices go down, gasoline prices go down, all of those things are contributors to the price of everything you buy, every single thing you buy at the grocery store, not only the food products, but the non-foods. If you get the price of wheat and corn down, it impacts the cost of food, but not only food, but then food you buy away from home.
right,
So yes, labor is the biggest reason why food away from home is so freaking high right now. But the cost of meat and the cost, which has been high because of the drought, which is now over, but the cost of the meat has been higher. The cost of the eggs have been impacting so much that there have been you've heard of companies that have been putting on like an extra charge for the eggs for the price of the eggs. So all of that stuff goes away, and so the price of eating away from home would come down somewhat. So there's these, and that's just a few of the knock-on effects which could happen. And let me drop also back to what the Fed has been saying. They said we don't want to necessarily get to 2%. We really would be happy to be approaching 2% because they really don't want to go below 2%. Because it took them what, 5 years or something to get back to 2% when it was under 2%. They're like, come on, we got to find a way to get back to 2%, but they couldn't do it. And so they're not that interested in getting down to 1.5%. They want to get it down around 2 and keep it there.
right. Yeah, and then every percent you get down on the Fed funds rate or the 10-year, that takes out like $100 million of interest costs that we have to pay at the federal government level. So it's if you get down like 3-4% somehow, then it's a huge savings on our national debt and everything else. So you have a series, like I said, secondary and tertiary effects where everything gets better. Everything got worse and kept spiraling worse, and then go the other way, everything gets better. So this can be, that goes to the boom. That if you have the cuts on the federal spending, the $1 trillion that have been talked about,
Right.
and you also save $400 billion on interest rates, and then you um, have more, you can get more growth of the economy. So if you have lower interest rates, you can get higher growth. Um, and you can also have pro-growth policies so
Right.
that you can have like a flat tax, which, oh, we're not getting much taxes coming in. It won't matter because we don't have to spend as much. So then you can afford to do it. And then 4 to 5% GDP growth is not impossible under these scenarios. And having 4 to 5% GDP growth above a 2% inflation number, that means you're growing your way out of the debt problem, right?
Right.
So then instead of, oh, Social Security is going to go bankrupt, it's like, no, we're on top of it. 4 to 5% growth, 2% inflation, keep that going. Everything's good.
The average citizen also doesn't understand how much regulation costs them. if they knew how much regulations cost them, they would be the first ones to stand in line and say, would you please cut back some of the regulations? But
Right.
as a business owner for 50 years, okay, I have a birthday this Sunday. You all know that. So I'm really old. 55 years, over 55 years in business. I know about regulations. I know a ton about regulations and what they cost you because I have to pass that along in the cost of the things that I sell. Well, today the EPA announced 21 areas, 21 specific areas of regulations that they're going to be cutting back on. And those are going to affect every manufacturer in the country. It's going to impact people that maybe have gotten out of manufacturing in this country, which can come back to this country now. People don't realize that California used to be a huge furniture manufacturing area. There's no furniture manufacturing at all in California anymore because of the EPA regulations that were involved in the lacquers and the other kinds of things that were being used on the furniture. So there's things like that that could come back. It's not that we couldn't do it profitably, it was that you couldn't do it given the horrific rules that were in place. So this could add to this productivity that you're talking about. Not could, will add to the productivity.
And if you have like say 150, 160 billion dollar effect of something, right? We talked about those big numbers.
Right.
There's like 150 million US households. That means $1,000 for every household. If the $150 million per year, that's $1,000 per year for your household.
Right.
Things like and then things like the eggs and the bread and the milk and the meat, those things can be 5% of your food bill if which is like you can get up to 8%, with like an entire month of free food
Yeah.
from groceries. So it's like it would matter to people, and people think, well, then I can just continue the war, this or that. It's like it's hitting you right in your pocketbook if you actually ran the numbers.
Yeah.
And then if you, especially your energy and stuff, like, oh, I'm paying extra 50 cents per gallon of gas for this thing. Do I really want to do that? Do I really care that much? Is it that important to me? You have to actually consider, is that important? Because if we make these fixes on food, on energy, on government spending, there is, and I've said before, you can run the numbers again, that of the just shy of $5 trillion that the federal government takes in for all taxes, income tax, payroll tax, corporate tax, all the other
Tariffs.
taxes, $5 trillion, 2.2, 2.3 is income tax. So if you take out 1.5 trillion, then you're within like 800 billion of getting rid of income tax.
Right.
So you could replace it with something else. It could be an entirely different tax. So it'd be like no IRS and you could, bump up the tariff. So we can only bump it up from 80 billion to 300 billion, 400
Right.
billion. So if we had 1.5 trillion in cuts in interest rates lowered, and then another $300 billion from more tariffs, you're within like 300, $400 billion of eliminating the income tax. And then you get rid of the entire IRS, 50 billion, $100 billion, right? Because we're not bothering to do it anymore, right?
Right. Yes. Yes.
So then you're at $300 billion. Any kind of like small, tiny tax on something else, you know, sales, some sales tax, some other tax. I would expect it to be called something like a freedom tax,
Freedom tax. There you go.
right? It would be a freedom tax, or even not call it a tax at all. It'd be like
Yeah.
freedom something,
Yeah.
right? And then it'd be free of IRS, free of income tax, right?
So
So how much would that help people? How much would they say, okay, now I can spend, I can do stuff. Yeah.
yeah, I think at the point that that Trump got rid of the IRS, there would be a really good chance that he would end up on Mount Rushmore.
Yeah. Yeah.
I think he would win, a large majority of the population's gratitude if he could just eliminate. I'm in the middle. I just almost finished putting together my numbers. It's taken me about 12, and I have a CPA that does the work. It's still taking me about 12 hours just to accumulate all the stuff and go online. You're all doing it, right? Go on to your mortgage and get the mortgage information. Go over to your pension and get the pension. I mean, ay, 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 ay.
I think it won't be Mount Mushmore. You know which mountain I think it's gonna be on? So it'd be a new mountain
Okay.
for Elon Musk and for Donald Trump. It will be Olympic Mons. Olympic Mons is the largest mountain on Mars. It is the
Okay.
largest mountain in the solar system. So having, a nice big thing of their faces
I see.
on there
I see.
will be where it will be. Yes.
Well, yeah, you're a futurist, so we have to believe
Yeah,
you.
that's right.
All
That's
right.
right.
Okay, let's see. Is there anything left in my list of things I wanted to talk to you about? Let me just check my quick notes here. Yeah, we hit it all. All right.
Great.
So
Well,
we've got a whole bunch more stuff coming up. Brian and I do. He's got some amazing slideshows that we'll be going through probably on Friday night and sometime over the weekend. And then this one, we want to mention that theoretically Jeff Lutz was on just a little while ago, and we'll put a card up for you to go check that out if you haven't already. Brian, as always, thank you for entertaining. This is like the best news. This is like, people should be jumping up and down and thanking you for showing us the how Trump and Elon are going to bring us the golden age. Here's some details of how we get there.
right, right. It's things are looking very positive. So just have to get it through a few more months and things will be really, really wonderful. Yeah.
All right. And to all of you out there, it's been great talking to you.
Yep. Bye.